Hey everyone, today I'm going to teach you guys how to put Fibonacci levels on your charts. There's two crucial ways to do this. Most YouTubers only focus on one, so please make sure to watch the entire video because you're going to have your mind kind of opened, if you will, with just one quick switch, okay? For this chart, we're just going to be using Bitcoin Tether 1-day chart, the daily. Now, what you're going to do here first is you're going to look for highs and lows on the chart. If you go back in time, there's many highs and lows as far as Bitcoin's concerned. You have one low from here from last summer, one low from way over here in 2020, and then one low over here from 2018. For now, let's just focus on the most recent real big low that we've had so far. And since we want to be precise here, here's what we're going to do to make things a little bit easier for you. You're going to click on the horizontal line, right? Find the lines, horizontal line. You're going to hit magnet, and you're going to put a horizontal line at the top, at the high, which is $69,000 for Bitcoin, and the low, which was from last summer, right down here, at about 28,805. All right, so you know exactly what those numbers are in case you don't have them memorized. I have them memorized, but I spend too much time trading. It's my job. Now, after that, you're going to click on the Fibonacci, third tab from the top. You're going to find it somewhere along here. Once you put a star on it, then it'll actually pop it to the top, okay? Now, after that, you're going to drop the first point at the bottom at the low on the exact day. You're going to drag it along here till you get to the top work right there. Now, what you're going to do next is not just going to leave it there. You're going to hit the settings icon right here, and you're going to go to the coordinates tab, okay? Coordinates. And then you're going to match the low and the high exactly to the numbers we talked about before. That's why we put those horizontal lines on. For the low, we had 28,805. And for the high, we had 69,000. Hit OK. And I might move just a teeny bit, but you're really not going to notice a difference. But when you get down to the minute and the 5-minute charts, it'll actually be very important that you actually level those off, if you will. Now, you can see right here, when using a Fibonacci retracement, you're not going to be using anything from before the high. So we're not looking at anything over here. That's a misconception. You see how stuff actually aligns here, but it's not stuff you need to be looking at, all right? It's not important because what you're trying to find out when using a Fibonacci retracement is where are the retracement levels, where might there be some good buying opportunities, okay? Now, you can see we stopped here, stopped here, stopped here, didn't stop there, didn't stop here, a little bit of resistance around there. So it worked a little bit more up here, and it's been losing some ground, if you will, around here. And so it's okay. It's not the best Fibonacci level, but it's fine so far. And let's add one more over here because we can always add more than one Fibonacci level to a chart. All right. And let me squeeze that down so it's not blocked by my head. And let's do this one more time. Actually, let's go here, magnet. There we go. The low was 3,782 and 13 cents. And let's go from here. If I keep the magnet on, it might work, but sometimes it just gets a little jumpy since I'm zoomed out so far. There we go. Let's double check. 69,037.82.13. Perfect. Okay. Now we go in here one more time, and you see how a lot of these levels are actually pretty similar. A little bit off. These ones are over each other perfectly, which is nice, which means there's actually stronger level of resistance if there's multiple Fibonacci levels right across from each other. Over here, there's been some trouble. Hasn't been able to hold it. Over here hasn't really been able to hold it too well. Tap down on that one. Right now we're trying to hold the first one. And we've had some trouble breaking above and holding above these two Fibonacci levels up here, all right? Overall, it's fine. This one will get you through the day. It's not as reliable, it looks like, the further it goes down, but that's okay. So, you're going to be using this quite a bit. Now, let's show the second way to use this, and this requires you actually turning log on. Now, this chart was a Binance chart. This one over here is going to be a Coinbase chart, so the number is going to be a little bit different, but the same premise is the same, okay? So here we go. Again, let's go to horizontal lines. One on top is 69,000. The one for the low down here is 28,800. 28,800. That's $5 difference from the Binance chart. Just so you guys know, it's not massive, but it's there, all right? Now, what we're going to do here is you can use the magnet tool for the Fibonacci. Click and tap if I can get it there. Nope, I'm not even going to try. It's not worth my time. 69,000. Enter right there. All right. Now, remember, log is on for this one, all right? And you see right away, see the blue one right here? See the difference? Came right down there. Instead of being right here, The blue one happened to be right there for a perfect level of support. Perfect. It's nice. What you want to see. Up here, we never really broke above it. But on this one, we did break above it. Okay. So you see how with having log on, it does make it more reliable. All right. Now, let's go back over here. And there's one thing you guys may want to turn off and turn off if things aren't looking too pretty. For example, up here, it was doing okay. It broke down, came back up, but then we had a death cross, so you would have to be using some more information besides just the Fibonacci levels here. But let's see. It didn't work too well over here, this specific one. It worked fine over there. Resistance here, that's fine, that's fine. So overall, you know, it's not too bad. It's more reliable than the other one, coming closer down here, but still, you know, not perfect, and that's okay. One thing you may want to do here, if you zoom back in, you can click on the Fibonacci level, go back to the gear icon, go to Style, and there's on the bottom, I don't know if you guys can see this right here, it says Fib levels based on log scale. If you turn this off, it'll actually give you a different reading right there. It'll bring it to what it was on this chart. So instead of being at that good spot down here, now it'll be like that. So what I'd recommend you guys do is you guys have a log chart. And if you ever want to just go see the difference between these two different Fibonacci levels, just click on the Fibonacci and just click on Fib levels based on log scale. That way you guys can have them switched whenever you guys feel like it. Because both are useful. Both are useful. But instead of having to redo it every time or look at a different chart, just do it on a log chart and just turn on, turn off, turn on, turn off, turn off, you know, and it makes it a really nice, easy thing to do. Now, and sometimes there's a reason for that, and we'll talk about that in 1 second. We're going to add another Fibonacci line right here. And that low is 3,858. Let's do another Fibonacci level down here. Back up here to $69,000. And did I get the coordinates right? Nope, it was a little underneath. So 69,000. All right. And let's make sure this has trend-based log on and off. There you go. So it's on. If I turn it off, see how all this moves up closer? Clutters everything else up. But that's the beauty of it. You can click on it and you can decide how you want to look at it. So if I were to zoom in here, we got two. The first one, it looks like it's doing fine. If I turn it off, now it moves right there. And it still has a use, but it seems like it knew what it wanted to do right there. So the log one was a little bit more reliable here once we got past the initial downward trend, if you will. Now, but let's see what happens here. We're on the daily chart. Let's see, and both of these are now log turned on, you know, log pricing on. What we want to do is actually, let's go to the weekly chart. Let's see what's going on there. Is it more reliable on this chart? Now, if you look at the weekly, it's a lot more reliable. Whoosh. There. It's fine. So what I would tell you guys and how to use this is, if you guys would always use the log charts, it might be a little bit better for you guys. And if you guys ever want to turn off the Fibonacci levels, as far as them using the log scale, you can just go over to push the Fibonacci button, on, off, on, off, on, off. And this is on. When it's off, the weekly chart doesn't look as nice as it once did, okay? There's a lot more lines just kind of going through random stuff, which is not what you want to see on a Fibonacci chart. Right there, perfect. Now we have a nice support level, support level, support level. All right. Now, so it does help you if you're looking for more longer term moves as well. So if we were just to get rid of all these drawings here and just go back to this naked chart right here, and let's just draw out the Fibonacci levels. And we're just going to use the wicks here for long term for Bitcoin. And remember, we don't care about anything from before the high. We don't care about any of this stuff in case you guys are thinking about it. So far, if we're using just this one on the weekly chart, we're still holding the Fibonacci level quite well. We're about to have a death cross, which is not good news, which will probably tank us again, to be quite frank. At this point in time, we'll see. A year later, you guys will still be watching this video. You'll know if it actually tanked or not. But from here, you know, we're still consolidating. Once the weekly candle closes below this Fibonacci, you can expect to start heading back down to other support levels. Not necessarily $22,000, $23,000, even though it's likely. But, you know, first we have to beat this support level and so forth. So remember, you're not just going to be using Fibonacci levels with no other technical analysis. You're going to be grouping this together with a whole bunch of stuff. Even me, I just used that death cross on the weekly chart that we're about to see happening. That's going to be a really bad event for Bitcoin. And then you might even want to use it for the monthly chart here as well. And on the monthly chart, look at it. it kind of held right there, but we're mostly watching it as far as what's going forward here. And if you look right here, we're barely staying above the 20-month moving average. The last time we fell down below the 20-month, there was a crash. Last time we fell below the 20-month, there was also a crash. So watch out for a potential crash here, guys. That's the main, besides all the Fibonacci talk. But yeah, everybody, that's how you guys are going to use Fibonacci levels. Thank you guys so much for watching the video, and please consider subscribing to the channel. Thanks, everybody.
Talk to me nice, talk to me honestly. Look in my eyes, don't let it fall.